Today, we're looking at the Genius Act, what it means for stablecoins, cryptocurrencies, other payment methods, and compliance issues that may arise, and then most importantly, your bottom line. I'm Mitzi Sullivan, CPA, and founder of Facts, Figures, and Fallacies from the Frontline. The Genius Act, the USD Stablecoin Act, was passed in July of this year, and it creates the first federal framework for payment stablecoins. These specifically are related to USD stablecoins, so these would be stablecoins that are backed by the US dollar. The Act defines who is able to issue a stablecoin. It also requires that there's a one-to-one backing. For every stablecoin is backed one-to-one by the US dollar. These are designed for fast, low-cost transactions and can provide an alternative to the high credit card fees that you're used to paying when you receive payments on credit card in your business. But there are some new regulations and reporting requirements that you need to be aware of. So the U.S. government still treats stablecoins as property instead of currency. That means when you transact in U.S. stablecoins, any cryptocurrencies, you may have to recognize a capital gain, just like you would with any stock that you sold. You can look for a new 1099-DA digital asset that will need to be issued if you're accepting stablecoins. This new 1099-DA will be available in 2025 and also required if you're accepting stablecoins or cryptocurrencies. So let's look at some of the advantages of accepting stablecoins or cryptocurrencies. The primary advantage that everyone loves is instant settlement, 24/7 with lower fees, so you have better cash flow management. And merchants really like it because there are no chargebacks. The stablecoins work very similar to cash, where if you're holding the stablecoin, you own the stablecoin. So these can be lost, they can be stolen. So many businesses choose to convert to the US dollar as on receipt of the stablecoin. Now, what do customers like about you accepting stablecoin or cryptocurrencies? I think the number one advantage would be global financial inclusion. So anyone in any country, in any income class, can own these stablecoins, and it allows them to store their currency in a stablecoin backed by the US dollar instead of holding their own local currency. That's very advantageous to businesses or customers that are in an emerging market where maybe their currency is not stable, they have high inflation. So this gives them a way to hold that currency in a more stable currency in theory. So this offers the opportunity for unbanked communities to save and transact in US dollars without a bank account. And that may provide a more stable alternative to a volatile currency in their home country. It's also a very inexpensive way to send cross-border payment, sending currency from one country to another. But of course, there are risks involved. This is a relatively new in the United States, not highly adopted. Let's look at some of the risks. There is regulatory compliance, the know your customer, the anti-money laundering regulations. These have to be followed by those that accept stablecoins or cryptocurrencies. There's also a banking risk, just like with cash. So there could be a run on a stablecoin, a bank could fail. If it ever becomes unpegged, and that's happened in the past with the Luna, if it ever becomes unpegged, it can go to zero very quickly. I think this is the reason that most businesses that are not in the business of stablecoins or cryptocurrencies convert to US dollars upon receipt. And if you use Stripe or other payment processors, your consumers can pay in stablecoins or cryptocurrencies and it will be immediately converted to US dollars. So with all these risks, why would you possibly want to accept stablecoins? I think the number one reason, other than the cross-border payments, is the lower transaction fees. So if you're a merchant and you're accepting Visa, MasterCard, you're paying close to 3%. If you use something like Stripe, your fees would be cut in half. Instead of Visa, MasterCard, if you accepted stablecoin or other cryptocurrencies through a payment processor maybe that you already have in place, such as Stripe, your fees would be cut in half. Stripe charges 1.5% versus what you're paying on your Visa MasterCard. You also have the ability to hold your digital assets in a self-custody wallet. That would save on transaction fees, and the transaction fees are very, very low. But the compliance costs are significantly higher because remember, there's no fraud protection, no chargebacks. You are responsible for security, and these transactions are irreversible. So if you're considering implementing payment processing through stablecoin or cryptocurrencies, consult with your CPA. Make sure your business has the proper security and compliance procedures in place. If you are a small business considering accepting stablecoins, download our free guide. It's attached in the comments below. And if you've enjoyed this content, please like and subscribe to the channel. Also, leave a comment in the comments section. That helps us get the word out. Thank you for watching, and be sure to check out our other videos.